Meta has just released its second quarter earnings, and once again, the company delivered impressive growth. From Facebook and Instagram to WhatsApp, Threads, and its massive investments in artificial intelligence, Meta continues to position itself as one of the most influential technology companies in the world. So why did the stock take a hit after the release? In this video, I'm breaking down Meta's second quarter results, take a look at the charts, discuss the three biggest risks to the business, and I'll give a one-year price target for the stock. As always, everything on this channel is free. I'll never try to sell you a course or a membership. I work as an equity analyst and enjoy sharing my research. Let's generate alpha. Let's start by looking at Meta's most recent quarterly earnings, and despite a mixed reaction from the market, I think there are some very important takeaways for long-term investors. Meta reported second quarter revenue of $60.8 billion, representing 28% year-over-year growth and beating Wall Street's expectations of approximately $60.2 billion. Once again, the company's family of apps, which includes Facebook, Instagram, WhatsApp, Messenger, and Threads, continued to demonstrate impressive user engagement and advertising strength. However, earnings told a different story. Meta reported earnings per share of $6.18, missing analyst expectations of around $7.19 per share. This was down 13% year over year. How is this possible when revenue grew 28%? Meta mentioned they had $2.40 billion of charges related to legal proceedings and $1.18 billion of severance expenses in connection with the recent headcount reduction. Without these one-off expenses, Meta would have seen a beat on earnings per share. Looking at profitability, operating margin declined from 43% a year ago to 31%, as Meta significantly increased spending on AI research, engineers, and data centers. Even so, a 31% operating margin would still be considered exceptional by almost any other large company. Net income came in at approximately $15.9 billion, down around 14% from the same quarter last year. Again, this wasn't because the core advertising business is struggling. It was largely the result of Meta accelerating its investment in artificial intelligence and long-term infrastructure. One of the biggest numbers from the quarter was capital expenditures. Meta spent approximately $31.8 billion during the quarter on capital expenditures, as it continues building one of the world's largest AI computing networks. That's a staggering level of investment, and shows just how serious Mark Zuckerberg is about making Meta a leader in artificial intelligence. As a result of this spending, free cash flow fell sharply to just $784 million, a dramatic decline compared to previous quarters. This is one of the main reasons investors reacted negatively after earnings. The market isn't questioning Meta's ability to generate revenue. It's questioning how long these enormous AI investments will continue before they translate into higher profits. Looking ahead, management guided third quarter revenue to between $61 and $64 billion, indicating that strong top-line growth is expected to continue. Meta also increased its outlook for full-year expenses to between $165 and $169 billion, while reaffirming capital expenditure guidance of $130 to $145 billion for the year. Overall, I'd describe this as a quarter where the business remained incredibly strong, but the investment story changed. Advertising continues to perform well, engagement across Meta's apps remains strong, and the company is generating tens of billions of dollars in quarterly revenue. At the same time, management is spending at an unprecedented pace to build the infrastructure it believes will power the next generation of AI products. For long-term investors, the key question isn't whether Meta can afford these investments. It clearly can. The real question is whether these billions of dollars in AI spending will generate returns that justify the cost over the next 5 to 10 years. Now let's take a look at the charts for Meta. Year to date, the stock is down about 16%. Over the past 12 months, it's down nearly 20%. Following its earnings report, Meta experienced a sharp sell-off, and the chart has weakened considerably over the past couple of weeks. At the moment, Meta is trading below both its 50-day moving average and its 200-day moving average. That tells us the stock is currently in a technically weak position. The 50-day moving average reflects the stock's short-term trend. Since Meta is trading below this level, it suggests that recent momentum has shifted in favor of the sellers. In many cases, the 50-day moving average can now act as a resistance level, meaning the stock may struggle to move higher unless buyers step back in with conviction. The 200-day moving average is one of the most widely followed indicators among institutional investors because it helps define the long-term trend. Trading below the 200-day is generally viewed as a bearish signal. It tells us that the long-term momentum has weakened. And before I become more optimistic from a technical perspective, I'd like to see Meta reclaim this level and hold above it consistently. Following the recent sell-off, Meta's relative strength index has fallen to around 33, putting it just above oversold territory. It suggests that selling pressure has been quite strong over the past few weeks. While an RSI around 33 doesn't guarantee the stock has bottomed, it does indicate that much of the recent pessimism may already be reflected in the share price. Overall, I'd describe Meta's chart as bearish in the short term, but interesting for long-term investors. For me, the key levels to watch are the 50-day and 200-day moving averages. If Meta can reclaim those levels over the coming weeks or months, it would be a much more constructive technical signal. Until then, I think investors should expect some continued volatility while the market digests Meta's enormous AI investments and looks for evidence that they'll generate strong long-term returns. Here are 3 of the biggest risks that could meaningfully impact Meta shares going forward. The biggest risk for Meta right now is obvious. They're spending an extraordinary amount of money on artificial intelligence. Mark Zuckerberg has made it very clear that Meta wants to become one of the world's AI leaders. That means building enormous AI data centers, designing custom AI chips, hiring the best AI researchers in the world, and investing billions into infrastructure. The problem is that nobody knows exactly how much revenue AI will generate. If it pays off, shareholders could benefit tremendously. If it doesn't, these investments may become a major drag on earnings. The second risk is advertising revenue is still the engine. Advertising makes up about 98% of Meta's total revenue. That creates concentration risk. If businesses begin reducing advertising budgets during an economic slowdown, Meta could feel the impact. The third major risk is regulation. Meta is one of the largest technology companies on the planet. That naturally attracts attention from governments around the world, whether it's privacy laws, competition concerns, content moderation, or antitrust investigations. Meta constantly faces legal and regulatory challenges. Governments could force changes to how Meta collects data, how advertisements are targeted, or even how some of its businesses operate. We are already seeing massive expenses related to legal issues. Now the big question, where could the stock go from here? Most analysts maintain a buy rating with an average price target of about $762. Looking at the discounted cash flow model, the base case estimated value for the stock is about $679, and the best case is $903. As for my opinion, I am giving Meta a buy rating with a 1-year price target of $750. Here are 3 reasons why I believe it's a buy. The first reason is Meta's incredible advertising business. Meta owns Facebook, Instagram, WhatsApp, Messenger, and Threads, giving the company access to billions of users around the world every single day. They have 3.6 billion daily active people, almost half of the world, demonstrating that user engagement remains exceptionally strong despite the company's enormous scale. This massive global audience is what makes Meta's advertising business so valuable. The second reason is artificial intelligence. While investors are understandably focused on Meta's enormous AI spending today, I believe management is investing for the next decade rather than the next quarter. Meta AI is already being integrated across its platforms, giving the company one of the largest AI user bases in the world. The company is also investing heavily in recommendation algorithms, advertising optimization, and content creation tools. If these investments continue to improve user engagement and advertising performance, Meta could generate significantly higher revenue and profits over the long term. The third reason is Meta's financial strength. Even while spending tens of billions of dollars on AI infrastructure, Meta continues to generate enormous amounts of revenue. The company has one of the strongest balance sheets in the technology sector, giving it the flexibility to continue investing aggressively without placing the business under financial pressure. Meta also returns capital to shareholders through share buybacks and dividends, while still investing heavily in future growth. Very few companies have the financial resources to fund massive AI projects while maintaining a highly profitable core business. That combination gives Meta a significant advantage over many of its competitors. When I put everything together, I see a company that continues to dominate digital advertising, owns some of the world's most popular social media platforms, and is making bold investments in artificial intelligence that could drive the next phase of growth. Will there be volatility? Absolutely. At a forward PE of 17, a quality company like Meta feels cheap to me. What do you think? Is Meta a buy here? Thanks for watching. If you enjoyed this video and want more earnings recaps with one-year price targets, please like and subscribe. Until next time, keep earning, keep saving, and keep investing. I personally own Meta shares. This is not financial advice, just my personal opinions. Make sure you consider your own risk tolerance, time horizon, and financial situation before making any investment decisions.